$352 billion. That is the amount of combined assets for federal-backed minority deposit institutions, better known as MDIs. And in a minute, we'll be talking to one of the CEOs of those financial institutions, talking health of small businesses, the economy, the future of banks in the U.S., kicking off Black Business Month right here at the Nasdaq. Hello, everyone. It's Jabari Young here at the Nasdaq MarketSite, and I am joined by Mr. John Lewis. He is the CEO of Harbor Bank of Maryland, right? And this is a bank, a financial institution that serves predominantly the Baltimore residents, right, down in that area, and has more than 350 million assets on its books. John, thank you so much. Welcome to the Nasdaq.
It's my pleasure to be here.
Yeah, absolutely. Well, listen, we're here at the stock exchange. You got to give me a stock, right? What is something that you're looking at, something that may have done well for you in the past, that young investor, what would you recommend?
Yeah, so I think Coinbase is interesting at the moment. You know, there's much to be figured out with respect to digital currency, but you know, I like the fact particularly that they've thought about governance and infrastructure for something that in the future will certainly be relevant to the economy.
Yeah, wow, you like the way where Bitcoin is, you love this digital currency?
Yeah, I mean, I won't be specific to Bitcoin or Ethereum or any of the other things out there, but I do think there is a relevance to it. I mean, money changes over time, right? At one point we were talking about cowrie shells, and even in our lifetimes we had pockets full of coins. Right, and we had dollar bills.
Yeah.
At this point, everything's digital.
Yeah, I still do pick up a penny when I see it on the ground, especially on heads. I do pick it up. But hey, listen, you know, at Black Business Month here in August, and at Forbes BLK, we call our journalism series Road to Economic Empowerment, right? Because when you talk about Black Business Month, so many issues that is going on within the business community. Interest rates, inflation, capital, environment, things of that nature. So again, glad that you can join us here. And when we talk about Black Business Month, do you have a figure in the Black community that has stood out to you from a business lens? And if so, who is that person? Doesn't have to be celebrity. Yeah,
so as a bank headquartered in Baltimore that serves Virginia, DC, and Maryland, you know, I would have to tell you Reginald Lewis.
Reginald Lewis.
You know, I started my career on Wall Street in part from the inspiration of his ability to be really engaged in leverage finance. And he's an inspiration, not only to me, but to many people that got into banking.
Yeah, nice. I have to go get a Reginald Lewis poster on my wall. I got to get that, right? I got one of Frank Sinatra and a couple of others, Miles Davis. Now you talk me into getting a Reginald Lewis poster. But let's dive into business first, man. You know, Harbor Bank of Maryland. This is a holding company, right? Harbor Bank Shares Corporation is the holding company of this bank. Total assets about $365 million as of first quarter. Any update there on your assets?
We fluctuate around that number. I would tell you at our size, if somebody comes in and makes a $5 million deposit, we're talking about 370.
Yeah, okay. Well, that's good to know. Right. And of that, you know, I definitely want to get into the commercial real estate on the books and looking at that environment there. But 2024, how's things looking at Harbor?
Very strong. So I will tell you, 2023, we had a record year in terms of profits. When we looked at profit from return on tangible common equity, our return on tangible common equity was 58.9%, right? So in context, that's almost twice that return as compared to a Google or a Tesla. So very, very strong year. Fundamentally, we are able to continue to find good loans. We've been able to continue to find well-priced deposits and run a clean bank.
Yeah. If I was to move to Baltimore, right, let's say tomorrow or something like that, and I wanted to start a small business, how could Harbor help me, you know, if I walked in with no capital, just a great idea? Like, what is that process?
Yeah, so I would tell you Harbor, over its 42 years of existence, has created an innovative model with respect to financing small businesses and entrepreneurs, particularly in low-income communities and from diverse and disadvantaged populations. We really have become the community bank of Baltimore. Up until last year, we were literally the only community bank headquartered in the city of Baltimore proper. But when we talk about who Harbor is in our ecosystem, we have a number of subsidiaries and affiliates that attack that specific problem. We are in many ways our own ecosystem. So as you mentioned, I'm the president and CEO of our holding company, Harbor Bank Shares Corporation, but also our bank, the Harbor Bank of Maryland, which is a community development financial institution. It's designated by the U.S. Treasury, but also a minority depository institution is designated by the FDIC. But in addition to that, we have Harbor Bankshares Capital Corporation, which, again, to go back to Reginald Lewis, is a specialized small business investment company, which is able to make private equity and private capital investments into small businesses, to businesses and entrepreneurs. And then in addition to that, we have the Harbor Bank of Maryland Community Development Corporation, which is our nonprofit affiliate, but does everything from advising to lending to making pre-seed venture capital investments in companies, right? So what we know is if you were to come as an entrepreneur, what you always might not need is a loan, right? But if you go to a bank, what a bank is going to give you is a loan. We always say when you have a hammer, everything looks like a nail, but that's not necessarily the case. So if you are coming and you are starting a business, your entry might be in the Harbor Bank of Maryland Community Development Corporation, right? We have a 6,000 square foot incubation facility in our headquarters where you might take up resident, right? We might give you money through our Entrepreneurs of Color Fund, which is a loan fund, but is more patient capital. We might make a pre-seed equity investment into you to help you figure out your business and your business plan, as well as lock down your intellectual property. So wherever you are in the beginning of that, and that continuum of capital follows all the way from you as a startup business to you as a mature business in need of loan financing. And that's how we built our institution, to be able to support small businesses and entrepreneurs, but intentionally support small businesses and entrepreneurs.
What does a small business owner need to know right now, right? Again, we are in very uncertain times. You talk from U.S. presidential election and what's going on there. Again, high interest rates, inflation and things of that nature. Hopefully interest rates are coming down. But if you're a small business, maybe, and you need to, maybe you're not paying attention to the macroeconomics of things, what would you tell them right now as a banker?
Yeah, I would say pay attention to the consumer.
Pay attention to the consumer.
Pay attention to the consumer. As we went through the pandemic, we had a lot of stimulus that was put into the economy, and there was a moment where people were getting checks literally for being alive from the government.
I didn't get one.
I didn't get one, but they were out there, right? We certainly had the Paycheck Protection Program and a number of other programs. It just put massive amounts of capital into the economy, right? As we've seen that capital move out of people's bank accounts, right? As we've seen inflation and the prices at the grocery store and the prices at the pump escalate, it has stressed in some way the consumer and the capacity. And then, of course, as you saw, things move from money moving out of a bank account to credit card balances expanding. There is a point when the consumer can no longer sustain the amount of consumption that was there in the economy over the past couple of years. And certainly for small business owners, how they continue to connect to customers and what that viable market looks like for their products has to be of great import.
Well, what is Harbor Bank telling you? What are your clients, your consumers telling you? I mean, are they, I'm looking at different reports all the time, and it's hard to tell where the economy is. It's different for different groups, right? You pay attention to the department stores. They say they haven't seen any default credit cards yet, so maybe the consumer is strong. Maybe it's not, because again, prices at the grocery store are very, very high. So wherever you, kind of fall, it depends, what the economy is doing for you, wherever you fall in that class. But what are your customers telling you?
Yeah, so similar, right? So it's every business is different, right? And I would tell you the fundamentals of a business is know your market, know your customer base, have a solid business opportunity, and have deep relationships with the customers that you have. In the market that we serve, we benefit in some ways from being insulated, if you will, because we are close to Washington, D.C. So you see a lot of government contractors. The government is one of the biggest purchasers, if not the biggest purchasers of products out there, right? So that helps us. Baltimore, contrary to some opinions that are out there, is actually a very healthy city. And we saw its importance to the country with the collapse of the bridge.
That's right.
And it reminded us all how much commercial activity happens in Baltimore and happens in the surrounding regions. But mostly what we're hearing from our customers is just an appreciation over time of having a relationship with us, right? And I tell everyone the importance of having a real bank, right? A bank that you can call, a bank that is going to be engaged with you and stay with you when the economy is a little bit rockier and less rosier, when interest rate environment is a little shakier than it's been in the past. That stability is really important, having a real partner in your bank.
Yeah. Well, listen, You were a CEO for a year now, right? You took over as CEO of Harbor in May 2023. Is it an enjoyable job? Like, what do you like about being the CEO of a bank?
Yeah, so it's an enjoyable job. I would tell you, as a young child, I thought I wanted to be a CEO. I didn't know exactly what it meant, but I thought that I wanted to be a CEO. And certainly, my earliest entrance into the working world was really working in the banking industry as an intern. The CEO job is different every day, right? My best mentors and the best guidance I've ever had, they've told me my job is to do what other folks in the company can't do, either because they can't do it or not empowered by the board to do it. So every day is literally different, and I enjoy that greatly. Sitting in the seat, the vision that I provide to the company is directly tied to how far we will go. How much I'm able to inspire employees in the firm and communicate things, again, ties directly into how far our institution will go. So, I always say to people who aspire to be CEOs or leaders of companies, it's an incumbent upon you to continue to make yourself better, because you are the limiter in many ways to the company that you are running and leading.
Yeah. Biggest positive surprise of being CEO? Positive surprise.
Yeah, I mean, the positive surprise, if we want to call it a surprise, I went through a very orderly transition. So I was president and chief operating officer of the company for 3 years. My previous CEO that I served under, who was now our chairman, Joseph Haskins Jr., was at the time the longest serving CEO of any bank in the state of Maryland, one of the longest serving in the country. And he made great investment to make sure that I was ready, right? So you have a lot of banks, particularly right now, and just businesses in general, where that succession planning and that orderly transition is going to be a challenge, or is a challenge. The pleasant surprise, although it's somewhat of a surprise, was just, one, the preparation that the organization, the board, and our former CEO made in preparing me to be ready for it. But also, change is hard. It's hard on organizations, it's hard on people. And the speed with which the company all got in line and continued to move in the same direction, and were able to go from an organization, again, that was very much founder-led, right, to one that I believe has turned into an enduring institution with a spread of talent in a future that's not dependent upon any one individual, has been a great surprise and a delight.
Yeah. With positives, there are negatives, though. What's the one negative, the negative surprise that you didn't know about being a CEO? The one that you'll call Joe up and say, man, you didn't tell me about this part.
Yeah, well, so our industry is a couple of things, right? So one, we've got over 4,500 banks in the industry. And what happens to 2, 3, or 4 banks affects everyone. And it affects everyone because it pushes up to the policy directives, right? And then it becomes regulatory guidance, and it becomes things that regulators are focused on. So I would tell you, while our industry benefits from being regulated, we have a financial system that is the envy of the world, and no small part of that is because of regulation and good governance and an orderly structure.
Is it too much regulation, though? Like, I mean, if you look at both sides, you argue one side of political aisle says it's too much regulation, we need to deregulate. And then the other side says, no, there's not enough regulation. Like, where are we?
Yeah, I think your question gets at where we are, right? Regulation has to be correctly applied. Regulation is not one size fits all. You can't regulate Harbor, a $400 million institution, the same way you regulate a $4 trillion institution. But at the same time, there are general principles that carry across the industry. But I would tell you, we go into cycles of too little regulation and not maybe looking at things as intently and deeply as we had. And I think that's how you get Silicon Valley Bank and Signature Bank to a period of overreach and doing a little bit too much, where you get, capital rules being different. And it's just part of the business, right? If that weren't part of the business, none of us would have jobs and responsibilities. So it's something that you do best to understand and be ready for, but it is very much a part of what we do. It's what banking is.
Yeah. Take me back, man. You grew up in Buffalo, right? You're a Bills fan, right? I'm sorry what happened to y'all. I'm a Cowboys fan.
Okay.
I'm sorry that with all the stuff that we did to y'all in the past. But what was that like growing up in Buffalo? What were your parents? What did they do?
Yeah, so my parents were both social workers.
Social workers.
So they, very much instilled in me just values, the importance of working with people, being engaged in the community, and imparted in me the value of education, right, and just being a good citizen and part of the community. Buffalo is a post-industrial town, not all that different than Baltimore, right? I tell people all the time, we have a commonality when I talk about my grandfather working for Bethlehem Steel. In Baltimore, people said my grandfather worked for Bethlehem Steel too. It's a city that for some time had to figure out what it would be after, the factories closed and competition came from overseas, but is very much figuring that out. In a city with great natural resources and great salt of the earth people. We might not have gotten the Cowboys, but we did get to the Super Bowl 4 times, right?
Hey, listen, I'm cheering for y'all now. I love Josh Allen.
There's a lot of Hall of Famers out of those teams, right?
Absolutely.
So I had a great childhood and loved growing up there.
What did you want to be, man? Like, on a Saturday morning, you're watching cartoons. Like, what do you want to be at a young age growing up in Buffalo?
Yeah, so you want to be what you see, right? So for me growing up, I saw doctors and lawyers and engineers, and those were the images of what success was. So I wanted to be a doctor, very much because that is what I'd seen. I actually got my first internship in a bank, and I had been working at a buffet the weekend before. I just wanted to get somewhere that had air conditioning. Once I got into banking, I said, this is what I want to do for a profession. I always, when I'm out talking to young people, I'm telling them, hey, you can do this. And it might be the small thing. For me, I was a kid who liked baseball cards because I liked that there was a price and it went up and down. But now, I was talking to somebody who was telling me about how they collect sneakers, right? And they're basically trading sneakers, right? And there is an opportunity, and I would love to see particularly more African Americans and minorities enter into the banking space because it's something that many of us have an interest in. We just don't realize that we have an interest in, and there's a profession that allows you to do these things that you naturally enjoy doing.
Yeah, when you found that out, again, you took that internship at Cornell your junior year, right? You're finding out that banking is my thing, and then you go on from Cornell, get an MBA at Harvard. Leaving Harvard, where are you at in your career? What are you trying to do?
Right. So leaving Harvard puts a lot of entrepreneurialism in you. You're going to leave here and change the world. So I was very much thinking I was coming out and wanted to do something big and entrepreneurial. But also, there I discovered that I really wanted to manage as opposed to be a banker. So when I left Harvard, I joined M&T Bank as an executive associate, which is their management training program. And I spent half of my time being a banker and the other half doing strategic projects for them. I actually had the strategic project of chartering a bank in New Jersey for them, which integrated into their footprint. But it let me more exercise the management and development aspects of what I wanted to do as a career.
Yeah. Minority deposit institutions, again, it's about 150 total in the U.S., right? And here you are now, the CEO of one. And, as you look at a deeper dive, we were talking about this off camera a little bit, I don't know where we are, but I'll read off the numbers and you let me know what you think, right? You look at breaking the minority deposit institutions down by groups. Hispanic, community, 30 financial institutions, about 143 billion in total assets. Asian community, 71 banks, 187 billion in total assets. Black banks, there are 23 total in the U.S., 8 billion in total assets. My stomach dropped, my heart dropped when I saw those numbers. Right. And you're talking about black banks, about 40 plus in 2001. And here we are in 2024, is only 23.
Right.
When you hear those numbers, what is the future of the black bank in the U.S.?
Right. Let me give you two things, right? So one, let me just talk from a macro perspective. So at this point, there are about 4,500 banks roughly in the United States of America. That number used to be 9,000. So as a sector, we're seeing a great reduction in the number of banks. And I would tell you, banks have, like any business, have to find their purpose. What is their basis of competition? Where do they add value? Why are they relevant to customers? The banks that are just making loans and taking deposits and competing based on having the lowest rates, that is not a business model that works anymore. When you have 3 banks that have over $2 trillion in assets, everyone else is small. As an illustration, if the 8th largest bank were to combine with the 9th, 10th, and 11th largest bank, it would still be smaller than the 4th largest bank, right? So when we talk about what's happening in the sector for small banks and community banks, they are going away unless they find a reason to be relevant, a market that they resonate with, people who want to bank with them and are raving fans and raving customers. So that is actually a benefit for minority depository institutions. Our customers love us. They want to bank with us. They understand our mission and our purpose. They see our dedication to the community. And those are reasons that you would want to bank with an institution that you might not find at another institution. That benefits us from an economic standpoint because we may not have to pay the highest rates for deposits, right? We may not have to have the largest distribution system to be able to reach our customers. They find us, right? And then when you compare us to other minority groups in terms of the sectors, I would tell you, particularly when you look at the Asian banks, there are Asian banks, a couple of them that actually have branches in China, right? So having that deposit base and investor base has allowed them to grow to a certain size. Similarly with some Latino banks with operations in places like Puerto Rico. The MDI sector, the African American bank sector, does not have that. What we have is African America at large, right? And we're dependent upon the continued support of African Americans for our institution, but also the communities that we work in, right? As I tell people all the time, we are Baltimore's community bank. Baltimore just happens to be 63% African American in a state that's 32% African American, but we serve all of Baltimore. We understand all of Baltimore, and we're able to super serve communities in a way that we feel gives us competitive advantage because we know the place. But I do think when we talk about the number of particularly African American depository institutions, you know, all hope is not lost. There was another African American MDI that was formed in Ohio a year and a half ago. It isn't that we have to continue to have a diminution in the number. What we need are entrepreneurs and communities that say we need a bank that serves us in this way and we will support that bank. And you could easily be back up to 40 in a decade with a concerted effort and capital.
Yeah, I was going to say, where does that capital come in? Because I'm even navigating some websites of, you know, African American black-owned banks, and you can just tell the tech infrastructure may not be as, superior than as bigger banks. There's higher interest rates that, sometimes you have to pay when you're going through that because the capital isn't there. Where do you find that capital at, to help support, black banks for sustainability, also, again, to survive, and if you want a new one that's going to come online, where does that capital come?
Yes, so we have a great capital story. I've mentioned before, our return on tangible common equity last year, which is an amazing return. It's amazingly investable when you look at those numbers. But when Harbor was started in 1982, Harbor had $2.6 million in equity capital. When I joined Harbor almost 10 years ago, that $2.6 million had only grown to about $8.9 million, right? And to be in the banking industry and not have equity capital means you can only attract a certain amount of deposit capital, and there's a ceiling on how much lending and investing you can actually do. What I would tell you is over the last 2 years or so, that number has gone from $8.9 million in equity capital to almost $115 million in equity capital. Some of that is us doing what we do and earning, but a big piece of that was a program called the Emergency Capital Investment Program that came about during the pandemic, where the federal government put $9 billion of capital into community development financial institutions. That is a transformational amount of capital. If you figure for every dollar of equity capital in the bank, that capital can be leveraged 10 times, right? We're talking about $9 billion, which leverages 10 times, almost $100 billion of capital in the industry, right, which minority depository institutions benefited from being some of those. The other thing that we saw is that as people thought about the condition of the country, right, you had commitments from large financial institutions. One was Wells Fargo that led and made a $50 million commitment to
Bank of America is another one.
Bank of America.
$2 billion, I believe they made.
JP Morgan. There were a number of banks that made capital available to banks. So, there are a number of MDIs. Harbor Bankshares Corporation included, that now have enough capital to grow, right? To serve our markets adequately, to expand our operations, and that's powerful. And as we're empowered, right, to be real economic actors in the markets that we serve, we can do the things that banks are supposed to do. With a balance sheet of a certain size, your profitability drives your growth, right? And your profitability drives whether you're able to attract capital from market investors. But let me take a step back, because people have looked at minority depository institutions in some way as less than or different than other participants in the economy, and certainly in the banking sector. And I would posit to you that we are actually special. We are actually different, right? When someone puts a deposit into the Harbor Bank of Maryland, we can show you how that helped to transform the community that you live in, right? That is a reason to invest.
Where your dollars are going.
Where they're going. That is a reason to invest in us in a different way than when you put your dollars into a place and your dollars may end up in another locality and not grow the market you're in. And if you look at it and you understand that, then what it means is you're one, getting a competitive product and a competitive offering, but also you're making your community better, right? And the ability of me to sit and compete with someone else and to be able to talk to someone who really cares about the community that they're in, we win. And that's a competitive basis that a lot of institutions don't have. And I think as MDIs continue to walk towards being competitive, they walk towards really valuing what makes them different and important to the places that they serve, and able to connect with the communities that they serve, that being able to compete effectively will differentiate us. And ultimately, I think the market will look at that and value us in a way that we are special institutions, and institutions that aren't going away, that institutions that have a reason to be here. And let me give you one last point on that, which I think became in stark relief during COVID, right? If we all remember the Paycheck Protection Program, in the beginning, the program had 3 rounds, right? And in the first round, many larger banks weren't participating at all. And then when they did participate, they were participating with folks that had accounts with them that they knew very well. And what you saw was just a gap that we've always had challenges to access to capital and financial services, particularly in low-income and minority communities. But you saw that in stark relief. So you have a program that was nearly $700 billion of capital to go small businesses to maintain employment, and you didn't have the infrastructure to be able to reach businesses in certain communities, absent community development financial institutions and minority depository institutions, right? So what it showed is that there's a value to MDIs, there's a value to CDFIs, because we are actually critical infrastructure to move capital, right? And that was a special situation where, again, the real need was there. But that need doesn't go away. These communities still need capital. They still need infrastructure to be able to provide capital, and we are a key to making sure that that happens.
Yeah. Another stat, and thank you for that insight. Another stat that stood out to me, again, when you're looking at, black banks and just banking sector overall, is the 75 billion annual disparity in savings, in the black community, right? And so this stat comes from McKinsey in their Economic State of Black America report, and it said households who build wealth incrementally also, by saving a portion of their income, but smaller paychecks and debt pay down make it harder for black Americans to put aside money, and that contributes to that 75 billion annual disparity in savings. How can we trim that number down?
Yeah, so take another step. So one of the joys of this role, right, is I get to talk to policymakers and lawmakers and think tanks and people who write these white papers, and it's interesting, right? But I also get to be the person who literally strokes a check to put money into somebody's hands, or offers people depository accounts. And one of the things that I always say, right, there's this idea that financial literacy is what will save African Americans and create wealth in communities. But what I know is that the person who doesn't have a lot knows how to manage what they have, right? And the issue of the lack of savings in African American communities is directly tied to the issue of not having comparable amounts of wealth in African American communities, right? If you don't have it, life eats it up. It doesn't end up in your savings account. What ends up in your savings account is the residual and what's left over, right? So, wealth creation, one, is intentional. There are some policy things that need to happen rather than talking about people, trying to save more and what's in savings accounts. But it also happens with earnings and better opportunities and better economic development and activities in the communities if we're really trying to affect the wealth disparity in those communities.
Yeah, and bring him home more so you can pay what you need to pay and Absolutely. Then save some left over. Thank you so much, John. Get you out of here. A few things, because you're CEO of a bank, and I'm sure people want your attention right now, so you can stroke some more checks. I'll take as many of them you want to give me. Low interest, of course. But banking industry as a whole, what do you see? I mean, more M&A. Again, KPMG came out with their 2024 banking Outlook survey, and it predicted that M&A would pick up towards the end of 2024. 38% of larger banks said that they would acquire another bank. And again, that M&A activity, what are we going to see? Are you expecting that to happen?
Yeah, so I'll go back to the point I raised before. I think our industry is a very interesting industry, right? And I truly believe you have 4 or 5 banks at most that are large, and they are the winners of the scale game. Everyone else playing the scale game is getting larger, but potentially having smaller returns on equity capital to their investors. They are getting big for the sake of getting big. And when you get above what is a natural market opportunity for you, to me, that's what gets you into the territory of the Silicon Valley banks and the signature banks. When you don't have a real relationship with the customers of your bank and the depositors of the bank, then you're beholden to whatever market interest rates are. And when you're not the highest rate or the most competitive rate, that money moves. Yeah. And that money moving destabilizes your institution. So I do think you will see consolidation, but sometimes that consolidation is because there's a want for a real strategy and value proposition for the institution. I think there are some institutions that are on the larger side of the larger sides in their market, and growth helps them to be more effective there. But I do really think the winners, as we look down the road in the industry, will be these largest players in the industry. A lot of the value in the industry inures to them, and then it will be specialized players who add value to a specific customer base, like African American MDIs and other banks that super serve either the communities they're in geographically or certain demographics and markets where there's a market opportunity for super returns and excess margins.
Yeah. Are you guys at Harbor looking to consolidate? Are you looking to acquire?
So I'm a believer that Harbor has to be around forever.
Yeah.
When we talk
that means expanding.
It does. It does. I mean, when we talk about having 15 MDIs, our voice at the table is very important, right? Again, we go back to regulation and having internal auditors and external auditors, all these things that give you credibility. It means something when Harbor is at the table talking about what we see in a local economy. Were we not there without that voice, I believe you would have policies in some places that are disconnected, and certainly you wouldn't have a community that relies on us to be there. Even if they're not banking with us, there's a psychological value of knowing I can walk into that institution and I'm not going to be discriminated against. I may not get the loan, but it's not going to be because I was discriminated against, right? So, we will always be forward-looking and opportunistic, but one of the things I'm quite excited about is what's happening in technology, right? When we talk about artificial intelligence, it lets you super serve a customer in a way that you could never do before, at a scale that you could never do before, right? So having the fixed infrastructure of a bank that's our size with where technology is going allows us to be a forward-looking and different institution that may be in the conception of a lot of folks that are out there. But I know that every day we can do more than we could ever do in a way that's efficient for us.
Yeah, well, I was going to say generative AI, right? When you think of that and you hear that, is it going to hurt, banking? Is it going to help banking? And, I guess it all depends on where you fall in that belief, because you can draw, you can push out products and you can get a lot of rich data and metrics coming back from what that is. Generative AI, you're a believer in it?
So I'm a believer in it, but I also am very clear that there will always be a person that needs to look at the outputs of the generative AI, right? It will never be something that's happening ungoverned. One, because again, you have a regulatory structure that would never let that happen. But two, because it has to be the case. And if we think about the way that banks and institutions work, we have people that do all these things, that do analysis, that look at rates and all these things, right? AI makes them better. It makes them more efficient. It helps them to scale the work that they're doing, but they still need to be there to look at the outputs of it. So again, I think that on balance is a benefit to an institution like ours. I don't have 300,000 people that work in my technology division. I don't have hundreds of billions of dollars in built infrastructure. So the ability to look at these technologies as they come online and be able to plug them in and grow with them as they grow is really being an institution that's at the right size, at the right time in history, because AI is transformational without a doubt. And it will be the folks that understand it best and find the right, safe, but useful implementations of it that create institutions of great value.
Yeah, commercial real estate, tricky sector here, it's up and down.
Right.
Work from home definitely has, put its mark on commercial real estate. And as I look at the, books of Harbor, about more than 130 million in commercial real estate loans. What are you looking at in this sector? What opportunities exist? If you're a small business, should you be looking at some commercial real estate if you need brick and mortar opportunity?
Yeah, so I would take it a couple of ways, right? So one, all commercial real estate is not the same.
Yeah.
So when you look at a lot of the MDIs in our commercial real estate books, many of us, our original investors were churches. Mm-hmm. So you'll have churches and faith-based institutions, and particularly strong ones that are part of our capital base, but also part of our commercial real estate portfolios. And then we like to finance entrepreneurs. So if an entrepreneur comes in, I'm trying to capture as much of their wallet share as I can. So it may be financing their business, it may be financing their home, but also if their business has real estate attached to it, then I would finance the owner-occupied real estate. And that is of a different character, certainly than speculative commercial real estate and office property. So that distinction, right? We don't have spec office property. That stuff sits in different places. But what I would tell you in terms of opportunities is always be looking, right? And who knows where valuations are of anything, but certainly property at this point. But when you look at assets that are trading at 25% of what they traded at 4 or 5 years ago, that is a much more desirable asset at this point than it was when it was priced in. And I think for savvy investors that really understand the markets they're in, there may be some opportunities, certainly if they have the patient capital to be able to wait for different economic cycles to happen.
Absolutely. I mean, data centers are one of those things. If you commercial real estate,
right.
You could see a lot of data centers being built off of that. First $1 million, how did you make it? How did you spend it? Anything you would do different?
Yeah, well, it's a good question. It is through work, right? I didn't inherit it. I have worked and had the pleasure of working for a company that believed in employee ownership, right? So as we made Harbor better, as Harbor created more value, it created more value and a benefit for me personally. I very much believe that employees and folks that work at an institution should share, and we continue to have that, and it attracts great employees to us and continues to do that. Haven't spent it.
Haven't spent it.
Haven't
still
spent
save?
it. Haven't spent it. I think when you look at these things, that wealth is an accumulation.
Yeah.
Right, and I try to have a balanced and diversified portfolio, but I am long Harbor.
Yeah, nice. So if I need $1 million loan, I know where I can come to. Right. Best management book, as far as leadership, your leadership style, Harbor, anything that you would recommend an aspiring CEO of a bank that they read book-wise? Yeah,
so I don't have a particular book per se, but if you come into my office, I've got a number of biographies and autobiographies of bankers, right? So if you think about, and this goes back to MDIs and particularly African American MDIs, at some point, these folks that have their names on these large firms were people, right? And they were people that were resolved to create financial institutions that added value to the markets again that they were in, but they were people that made a difference. And we look up in 30 years on, centuries on, you have the institutions that they created. So I find great inspiration in the stories of each of those individual banking entrepreneurs. But I always joke I'm probably the one person who has a collection of banker autobiographies.
Yeah, banker autobiographies. I gotta get one of those. Get me some banker autobiographies if I know I'm gonna be a CEO like you one day. And I get you out of here on this, man. Jim Collins, we speaking of books, he wrote a good one, Good to Great. I love that book. What's the difference in 2024 between a good book, a good bank and a great one?
Yeah, so again, I think a great bank has deep relationships with their customers, right? That's the bedrock of everything. If you are not providing what your customer and your market need, right? If their attachment to you is as simple as the fact that you had the cheapest term sheet or you gave them the highest rate on deposits, you're not great. If they look at you and they tell people, I love this bank and you should bank with this bank that I bank with because of X, Y, Z, you are a great bank and you will figure out how to make every other aspect of your business work if your customer base is with you in deep relationship with you and really banks with you for more than you just being cheap or being the provider of the highest rates of interest.
John, I could do this all day. Unfortunately, we're out of time, but love to have you back, continue to talk macro. There's so much stuff to get through when it comes to business, how it impacts Black community and all of that. So definitely love to have you back to talk more. And you're only a car ride away, right down in Baltimore.
There you go.
Appreciate all the time and happy Black Business Month.
Same to you.
Absolutely.
My pleasure.
Thank you. John Lewis, Harbor Bank, Jabari Young here at the Nasdaq MarketSite. Thank you for watching.